Hey everyone, it's Daniel here from InfoVest. Hope you're all doing well. Want to talk about this very interesting article, which I'll put in the description for you so you can take a look at it. It's an article from CNBC. Basically, the title says manufacturing orders from China are down 40% in unrelenting demand collapse. It's so funny because couple months back, I was talking about this situation happening, especially with the rate hikes that are continuing and continue to move up higher, which would basically shrink demand to very, very high levels, right? And so here are a few key points in the article. Basically, US manufacturing orders in China are down 40% in what a logistic manager described to CNBC as an unrelenting demand collapse. Asia-based shipping firm HLS recently told clients it is a very bad time for shipping industry. China to US container volume was down 21% between August and November. Chinese factories are shutting down 2 weeks earlier than usual ahead of Chinese New Year. So this is what I was saying before, right? Basically, in the beginning, when all this COVID happened, all the stimulus money that came through, all the pumping of money that came through, basically people received the stimulus money. They went out to the retailers, bought as much as they could, created shortages, right? Because now, basically consumers bought more than what the retailers were expecting. Then the retailers went to their suppliers, ordered a bunch of goods, and while this was happening, fast forward 2021, after 2021, from 2022 and onwards, we started to hear from the Federal Reserve and from a lot of central banks that they're going to increase interest rates to very high levels. They're going to be very aggressive with it. They're going to tighten the markets. And all of a sudden, you have this effect where retailers get a shipment because it was taking very long time to get these goods from the east to the west. And because of COVID, because of the lockdowns, it made shipping time worse. So they had to order a bunch of goods. And by the time when the goods came in, hey, the demand basically faded away and retailers had a bunch of items on their shelves that they needed to get rid of. And by summer, you saw a lot of retailers go out and give basically discounts on many of these items because they just needed, it was a cost for them. It was a cost to keep this on their shelves. And now fast forward, because the retailers have now learned from their lesson of that situation and know that, okay, down the road, it looks like, we're probably going to head into a recession. It looks like demand is going to collapse. So guess what? Those retailers that are going out to their suppliers and ordering certain goods, they're basically going to stop. They're going to slow down. They're going to of course, there's going to be a demand collapse because, people are not buying. Right? Why would entrepreneurs, why would businesses buy more product if people are simply not buying? Right? If you get the Federal Reserve going out, tightening, raising rates to try to crush inflation, to create job losses, to create spending patterns that basically stop, right? Creating tightening conditions. Why would entrepreneurs, why would businesses go out and order more goods to bring it in if no one's going to buy, right? So now the effects of that, we see it from this article from CNBC where China's feeling the effects of basically a demand collapse because less goods are being ordered. You're seeing that vessels are basically now empty and the prices of shipping is coming down. So, you're seeing the suppliers out there, the shipping industry, trying to incentivize to people to buy, to ship with lower prices. And the job that the Federal Reserve or the central banks that are around the world are trying to do is somewhat working, right? Even though they may not have a control on COVID and supply chain and whatnot, but from a demand point of view, they can create some sort of collapse. They can create some sort of effect that can cause, these shipping containers to lower the price, which they did, right? If we go scroll down in this article, it says here the U.S. West Coast ports take the biggest hit. HLS cited trade data showing that U.S. imports from Asia plunged in October to their lowest levels in 20 months The spot rate for a container from Asia to US West Coast has crossed the break-even point with little room for further reductions, it wrote. So any more reductions, these companies are going to be in loss. Right? The large West Coast ports of Los Angeles and Long Beach have experienced the largest drop in trade, according to Josh Brazil, Vice President of Supply Chain Insights at Project 44, as shipments also routed some of their shipments to East Coast to avoid the risk of major union strike at West Coast ports. Now, what I wanted to get to was HLS expects most carriers to extend their West Coast rates until December 14th, holding at 1,300 to 1,400 per 40-foot equivalent containers, FEU. And however, U.S. East Coast rates are expected to drop by 200 or 300 to an average of 3,200 to 3,300 per FEU in the first half of December. So you're seeing that price come down because people are not really, because you're getting the demand. People are not really buying. You're not getting that demand. You're getting that demand collapse. So this was expected, right? This is what we talked about. Now, going forward, what does this mean? Now, if this continues to happen and people stop buying, there's a complete and a continuation of a demand collapse for a very long time, and you're hearing that, okay, some of these firms are basically shutting down earlier because of the Chinese New Year or what have you, right? Then what does that mean in terms of supply? Supply could shrink because you have now less suppliers. And that basically, in turn, creates a bigger problem down the road that sure, you can get a demand collapse, cause prices to fall. But then once that demand starts to pick up, and if there are businesses or manufacturing companies or suppliers that go bankrupt, or shipping businesses that go bankrupt, and there's less players to help with the delivery and whatnot, then that's not going to solve the supply chain issue. So, maybe we could see that, sure, we see a dip and then afterwards a pick back in price because less entrepreneurs, less businesses, less suppliers. And then when people come back and they say, hey, I need to buy some things. Well, sorry, we're out of business. Sorry, we're out of business. Sorry, you may have to go to this person. And then if they get an inflow of orders, then guess what? Prices start to jack up again. So let me know what you guys think. Leave a comment below. Hit the subscribe button, hit the like button, and the bell icon to be notified on the next video. Let me know what you think about inflation, where it's headed, what about the supply chain issues. Can the West deviate from this, from moving away from China to maybe other sources, other countries, India being one of them, to solve this supply chain issue? Will it ever be solved, or will we live like this forever or for a very, very long time? Let me know what you guys think. I'll see you guys around. Cheers. Bye.